The impact and the damage of the lockdowns was much worse in Canada and Australia and New Zealand because they had strong centralized governments, and it was weaker in the US because we had state governments. If it wasn't for Florida and Texas, we might not have ever reopened our economy.
Hello guys, and welcome to another video of Crypto Money Talk.
If we look at the past year, what you've got is a drawdown of all financial assets. So the NASDAQ is down about 22% over the past year. And so NASDAQ represents tech companies and all the risk assets. But on the other hand, if you were to go and look at like the bond market and the bond portfolios, bonds are down, like the BOND index, the long bond index, it's down almost 17% in the year. So for 30 or 40 years, you had this 60-40 bond portfolio. And the idea was if stocks work, then bonds will be a low return and stocks will be a high return. But if stocks trade down, people will shift their money to bonds, and the interest rates will go down, the bonds prices will go up, and you'll actually get a yield on your bond portfolio. But of course, that broke around March of 2020. And the reason it broke in March of 2020 is because interest rates got pegged to zero. I think what happened here is the Fed just pumped tons and tons of liquidity, and we stayed high for about a year and a half. And I remember when Jerome Powell said, "I'm not even thinking about raising interest rates," and said strongly that it'll be till 2024 before interest rates start coming up again. But here we are in 2022, and now instead of raising them a quarter point, each time, now they're raising them 75 basis points. So they're taking 3 steps at a time, multiple times. So we took the cost of money down faster than any time in history. And now we're jacking up the cost of money faster than any time in history. And the result is that all the traditional models are broken. If you want to create inflation, you do it a couple of ways. Either you cut the supply or you increase the supply of the money that's available to buy it with. So if I make it illegal to manufacture food, the price of food's going up. Right? I don't even need to print more money, right? I can create inflation just in a war, like in World War II. We have gas rationing. You have food coupons. Why? Because all the gasoline gets shipped off to Europe to put in tanks or to put in airplanes or put in ships. So when you have policies that are declaring war on something, you divert resources. So we had a war on COVID. We have a war on carbon, an energy war. If I decide I don't want you to burn coal or oil, then I drive up the price of energy. If I decide I don't want you to show up in your office, I drive up the price of production. So we've got lots and lots of wars, right? You've got a culture war, you've got a war on office work, you've got a war on carbon, you've got a war in the Ukraine. The war in the Ukraine has escalated, right? It's not just a war in the Ukraine, it's really a kind of a quasi-economic war on Russia. So when we actually imported Russian sanctions, we cut the amount of gasoline or the amount of fuel available in energy. We drive up the price of energy. So every single time you actually put a public policy in place, you create inflation. Policy is inflationary. GDP measured in nominal terms is a gross distortion, and then CPI is a gross distortion. If I have 100 things that you want, and I pick 10 of them, and I measure the increase in the price of 10, and I ignore the price in the other 90, I can show you CPI is 8%, right? 8.3% is the number this morning. But the actual inflation rate is higher. It's inflation on something you want, but I'm not going to choose to measure. For example, the 30-year bond is traded up to 350 basis points, and it was 180, right? Mortgages have doubled. So mortgages have doubled, housing prices are up 35. And that means in theory, the cost for you to actually buy a home is going to be 50-60% higher year over year. Let me give you a 2-year post-mortem since we started dealing with this issue. Microstrategy had a $500 million of cash, and we saw interest rates of 0, and we saw the stock market inflated in the summer of 2020, and we said, well, what are we going to invest in? And we looked around at everything. Should I buy gold? Should I buy land? Should I buy art? Should I buy some crypto asset? And what's going to happen next? So what we did is we decided to buy Bitcoin, and we bought $250 million of Bitcoin August 10th, 2020. And then around September 10th or so of 2020, we bought another $175 million of Bitcoin or something like that. And then we started buying Bitcoin more in December, and we kept buying Bitcoin. We ended up buying nearly $4 billion, $3.97 billion of Bitcoin over that time period. So in terms of like our strategy, Microstrategy has just bought as much Bitcoin as we get our hands on since August 10th of 2020. And in that time period, stocks gyrated north, they gyrated south, currencies have changed. So let me tell you what's happened. Microstrategy stock, our stock is up 94% since that day.
Wow.
Bitcoin is up 77% since that day. The S&P index is up about 18%. The NASDAQ index is up 7.5%. Gold is down 16%. The bond market, if you just bought bonds, they're down 18%. And silver, if you think silver was better than gold, it's down 32%.
Jeez.
Now, if you go on and say, okay, well, fine, let's just buy big tech. If you had bought the greatest of the big tech companies is Google. Google is up 41%. Apple is up 39%. Microsoft's up 22%. You might have won. Those were all better investments than the S&P. Much better than NASDAQ, much better than gold. Not as good as Bitcoin, not as good as MicroStrategy. But if you bought Amazon, you're down 18%. That was overvalued in the summer of 2020. Like, a bunch of 20-somethings were just buying Amazon because they thought, well, we're all ordering Amazon stuff, so it must be good. Well, when you buy something that everybody else understands to be good at the same time they all agree with you, it's normally bad.